All right, something I want to show you. So I was out looking at my USAA site and I was looking at annuities, and guess what USAA is selling? An equity linked annuity. I'd actually told them I'd quit if they ever sold one. But to their benefit, they advertise it, I think, in a fairly respectable way. I'm not sure it's a great product, but they call it a fixed index annuity. Anytime you see the word index, it can be a life product, it can be an annuity. It's the kind of product we're talking about where it sounds like you get the market upside, but you don't really. But a lot of people sell these products. They talk about you get all the market upside without the downside. They imply you get a lot of the upside. I think USA, what they say is you can earn interest up to 9%. They've got a cap at 9%. Remember how material that is. You cap it at 9%. The market's up 15% this year, so you're not going to get all the upside. You're capped at 9. So you could have earned 9% interest. Notice why they keep calling it interest. So I like that. They're making this. So what way they're advertising this is not, this isn't a way to participate in the stock market. This is the way to maybe add a little juice to your fixed annuity. So maybe you could have bought a 5% fixed annuity, but if you do this, maybe you'll make 5.5%. So I like that. I can live with that. I still don't think it's a great product. You can earn interest between 0 and 9% cap rate in a flat market, and you could earn 3.5% on your cap. So essentially 3.53 is your minimum return, which is a pretty good minimum return. You can earn as much as 9%. You won't earn interest, but your principal stays safe in a down market, and you could earn 0% kept in your principal. It gets a little confusing between the 3.53. As far as the stock market, this has got some typos in it, but in 2024, you would have made 23% versus 9%. So they're pretty honest there. They could have picked a market where it was up 9.2% and said they didn't do that. Remember on the exam, I didn't give you any caps, did I? That would have been tough because you would have to had every single year. You know how complicated these get. I essentially gave you, because you're building it yourself. Your 401k plan, they're comparing it to putting your money into an S&P 500 index fund in a 401k plan. It's dependent on the market performance and a flat market. I don't know what they're talking about this 3.53. Again, it's really confusing. Your 401k plan is dependent on the market performance. It's in a down market, your account could have lost 18% or 38%. I'm sorry, 38%. Now, USAA, we were doing what you did on the exam, and I was running USA stock portfolio, and we actually made 1% in 08 when the market was down 38%. So what we're doing in class, I'm not saying I dislike it because it's, I think, a bad strategy. I dislike it because I think it's very badly advertised. And the other thing they say here, you get protected growth and retirement savings based on the S&P 500 performance, and get protection from market downside. You can, I like this sentence right here. You can possibly earn more than with a traditional fix. I can live with that. That doesn't seem deceptive, does it? Seems pretty reasonable. Keep more earned interest and give your money faster, grow your money faster by delaying the tax impact. They're talking about just the deferral and tax there. They're not talking about the stock market. Interest is credited to your fixed annuity at the end of each term. After that, the interest from each term is locked in, protecting it from further market declines. Depending on your future needs, you could use all or part of your deferred annuity to guarantee income. So it doesn't have that excessive marketing that I've seen other places. So I applaud USA for keeping it much less hyped up. I doubt they're selling much of this. I don't think anyone's going to read what I just read and run out and buy these things, because I thought that first page was especially very confusing the way it was written. But they have one. Why do they have one? Because it's the fastest growing product out there. But why aren't they selling it? The same reason they didn't sell variable annuities and variable life. They're a direct writer. They sell everything by phone. They don't have commissioned agents out there. It's really tough to sell these products when all you have is the internet. So I doubt they're doing very well in these products. You probably should buy this from USA because the last time they messed up with a product like this, they bailed out the customer. But I won't guarantee that to you here. But I would never buy a product like this. I would love to know who's managing this at USA. My guess, I still know most of the investment people there that are still on the corporate side. My guess is they're probably outsourcing most of this to some investment bank doing the entire setup for them, that they're not doing internally because when they sold everything off to Victory Capital, they lost their option trader. They don't have the people who would do this. I met at USA a few weeks ago, and none of them are trained to do something this complex. They probably could figure it out if you asked them, but none of them were doing anything like this. So anyway, so even USA is selling these things. That's kind of sad, but at least they're a little honest there. All right, are you ready for healthcare? You got your document open. You ready to take notes? So we're almost finished with this long article, and then we're going to go pretty fast with short articles. This is the article about how the healthcare system killed his father. So, um, what he's asking is, how would this have looked to his mother if it had been a more normal product, if it wasn't shielded by Medicare or health insurance? So even the most casual effort to compare these prices to marginal costs. So the bill that she got 10 days after his father's death, the hospital sent his mother a bill for 5 weeks, $637,000. He was charged 11,590 per night. That'd be a pretty good Airbnb, wouldn't it? 11,590 per night. How many star hotel is that? The most I've ever paid for one night in a hotel is like $1,000. And that was like 20 something years ago. That would probably be 5,000 today. That was really nice. We had chandeliers. There were chandeliers in the bathroom. So it was a nice, I had my own butler. That's a pretty nice hotel, right? You think his dad had a butler showing up at the hospital to help him out? Probably not. So 11,590, that's an expensive room. That was an ICU, 7,400 for his semi private room. You think for 7,000 bucks you get your own room. $145,000 for drugs, $42,000 for respiratory services. So what was she supposed to do with that bill? She didn't care. She paid about $1,000. She paid $1,000 for the hospital to kill her father. So you had to say that's probably still overcharging. Um, but now the Medicare pay for all of this. That's kind of the debate. You don't really know if the bill you were sent is the bill that was actually paid by the insurance. But if you don't have insurance, that is the bill they would try to collect from you, and then they would somehow negotiate with you to get, some agreed to amount. So you feel grateful for the protection of Medicare, only if you don't realize how much you spend to fund this system over your lifetime. Someone's paying for this, right? If the hospital actually got that much money, someone's paying for it. She may not be paying for it, but we're paying for it as taxpayers, or we're paying for it through our payroll deductions. So would our health care system be so outrageously expensive if each American family could spend that 1.77 million over a lifetime instead of entrusting it to the government and to Medicare and insurance companies? The Affordable Care Act, which has been in the news this year, right? I mean, just think about it. What are Democrats saying? We don't want these subsidies to go away. There's a big debate about what percentage actually are getting those subsidies, but why are there subsidies? So subsidies for what? The true cost. So if the true cost is 10,000, but the subsidy is going to bring that down to 2,000, what does that mean? Someone's paying that 8,000 bucks. And who is it? Who's paying that 8,000 bucks? So, you have to ask the question, if those costs had to be paid by the people receiving these services, would that change their behavior? So he complains about the Affordable Care Act the same way I do, that it was really focusing on getting more people into the system rather than trying to fix the cost side of it. The current reform will likely expand the government's already massive role in healthcare decision making, all just to continue the illusion that someone else is paying for our care. And that's what debate going on in Congress. I'm not saying I want people to see their bills going up hundreds of dollars, if not $1,000 a month. But I also know if the subsidy does happen, your generation is probably the ones paying for it. Someone's going to pay for that. Um, so the mom wasn't the customer. The insurance companies and the government were the customers. That's why the hospital didn't. Well, he says it at the very end. Look at his last sentence. Imagine my father's hospital had to present the bill for his care, not to a government bureaucracy, but to the grieving mother. Do you really believe that hospital forced to face a victim of its poor quality service, forced to collect the bill from the real customer, wouldn't have figured out how to make its doctors wash their hands? So again, we'll talk about this. When doctors have to report their error rates fall dramatically. And what the hospitals do, they fight hard not to have to report their error rates. So he's saying, make this more consumerist, let the consumer see everything, and the system will change. That's his argument. So you had two articles now to say we need less insurance. All right, we'll see if that argument comes up more. Um, so again, he wrote this as a book. I don't recommend the book because this article really covers the book pretty well. So, but I did read the book. He's a good writer. You can tell he's a journalist. So he's a good writer, but he covers everything pretty well summarized there. All right, the next article is pretty short. This is one you can look up separately. And so I don't know where to put this one. I put it under the solution. The reason I put it under solution is if the solution that you've seen from the first two authors is less insurance, more out of pocket. We pay for more of our healthcare ourselves. So we're more like consumers. Is that fair to everyone? And what this article says is women pay more for healthcare over their lifetimes than men. And so as we move to these high deductible products, oh, I loaded it twice. This is an old article, but you can find something. You could add this as your 10% or that extra. You can find more up-to-date articles on this. So as we move to high, what does high deductible mean? More out of pocket. That's what that first article was talking about, to a $5,000 deductible. The author of the second article, he's talking about a $50,000 deductible. What does that do? It's unfair burden to women. A new study says largely because women need many routine medical exams that quickly add up. The median expense for men under 45 is less than 500. For women, it's 1,200. So over 100% higher, 140% higher cost for women. Now, what do men say to that? Yeah, but what? We pay more for what? What do men pay more for? Auto insurance, life insurance. But then women say, yeah, but we pay more for makeup. We have childcare, So what's the solution? Maybe get a panelist of economists to sit down and figure it out, the average man, average woman, and maybe do it through the tax code. I don't know. If it's 12, I have no idea. I'll just make up a number. If it's $212 more expensive to be a woman than a man a month, then just reduce taxes. I don't know. I don't know the solution. But healthcare is not the only thing out there. Auto insurance, how much more expensive is auto insurance for men than for women? That's the question. Well, healthcare, it's really not that much different because men and women, because we don't have the high deductible products yet, it's about the same. So how much of that shift would be? I bet the men in here pay a whole lot more for auto insurance than the women, but we don't know on the health. You also compare rates. Any of y'all married, well, then you get a combined rate for the husband and wife, right, together, so you don't really even know then. But it is, men are, now, why do men pay more for auto insurance? Is it just sexism? Huh? They're horrible drivers, right? That's the reason. Why do women pay more? So I think women have the stronger argument, right? It's like, we pay more because we're women, not because we're horrible, unhealthy people. It's because we need more medical services. Men are just horrible drivers. They could be good drivers if they wanted to be. So, you can go wherever you want on this argument. I'll let you take it. You're not going to offend me either way. And if you say something offensive to either sex, I'm not going to share your paper with anybody else. But I want you to at least address it. It is something that needs to be discussed. When you're looking at these high deductible, it's not pair. Now, for married couples, it probably doesn't matter because they're getting, the benefit and the expense all together. But for single women, single men, it is pretty material. This came out of 2007 Express News. So it's almost 20 years old, but it's still true today. That hasn't changed. So I put it under solution because that is kind of the outcome of reducing the use of insurance. Now the big one, let's talk the tax code. This is one you definitely can get more current data on. I'm trying to leave you some places so you can do more research and get a better article. So health insurance, I'm convinced this is the main reason the US looks so different than all other countries. And it's another one of those places where most politicians agree, but they're just too scared to do anything about it. I think Kamala Harris proved it when she talked about this. You bring this up, and even if the other side agrees with you, they're still going to beat you up for it because it's so easy to say she just wants to raise your taxes. I mean, that's essentially what's going to happen. So we've long understood that the tax code was the problem. They should put this in caps, the problem. They didn't say the tax code was a big part of the problem or part of the problem. They said the tax code was the problem and occasionally even shared this understanding with the public, most recently during the debates. This is during the Clinton health plan. It gives the biggest subsidy to who? The wealthy. So how does this work? Let's talk about this plan. Oh, I didn't, under possible solutions, the women. Here, I'm just saying, maybe find something more up to date and then state your opinion. One thing I do count off on the paper, make sure you get this in your paper. A lot of students, they go through the rubric and they just talk about each thing. And some things on the rubric contradict each other because it's opposing views. And at the end, some papers are like, I have no idea what this student believes because they've agreed with everything. They want less insurance. They want more consumerism. They want a single payer plan that the government provides. They want, it's like, wait, you want all of them. So there's some things you agree with. So here's one, just give me your opinion. So a lot of times people say, yeah, that's true, but there's no reason to fix it. Men pay more for some things, women pay more for some things. It probably is a wash. Others say, well, we can't fix it unless we do research until we know how much more men and women spend. And then someone else might say, some men pay more, some women pay more. On average, women pay more, but some men pay more. If you try to fix it, you're only fixing the average, but you got all these bumps around the way, who knows? But give me your opinion on that. Your opinion can be, just let it be. That's life. So there's some things you benefit from, and some things so that one's just read the article, maybe update the numbers if you can find them, if you want to get some extra points there. But on the tax code, one real important thing on the tax code is to make sure you discuss all the parts of it. So the tax treatment. So we already talked about the big issue here. It's the most favorable tax treatment in the entire tax code. The employer gets a tax deduction and it's tax-free to the employee their entire life. Now your 401k, it's tax deductible to the employer. It's tax-free to you until you retire, then it's taxable. Your Roth IRA, you don't get any tax deduction, but it's tax-free forever. Your traditional IRA, you get tax deduction today, it's tax-free, but then you retire your tax. Health insurance is the one thing where you get a tax deduction to the employer and the employee never pays tax on this. Now the question is, why? Anybody know the history of this? I think we addressed it in one class. World War II, you remember that? Salary caps. So the government says you can't pay your employees any more than X because we're in a war economy. So what do employers do? Increase benefits, primarily health insurance. And you know, that's obviously it was challenged in court. Is providing more health insurance, is that violating the salary cap? And the courts said, no, it's fine, they can do that. USA did some stuff like that, and that's just on healthcare. USA provided subsidized lunches. That was deductible to USAA. I didn't have to pay tax. That USA was keeping my lunch, cost of my lunch down 30, 40%. As an officer, I got my lunch for free, but they did take some out of my salary. I forgot about that. I didn't like eating in there. It seemed like it was just, I didn't like it as much as the normal cafe. So I wasted money on that, but it was subsidized. So I did get some, but there are some benefits, but health insurance is by far the largest. Some people get a company-owned car. I don't know, are company-owned cars taxable to the employee? Your employer provides you a car? Y'all probably aren't in jobs where your employer provides you a car. I never got that far up. I was VP at USA. You had to be an SVP to get a car, so I never got my car. What do y'all think? Someone should research that. Someone Google that. It's possible. If your employer provides you a car, you have to pay tax on that. I don't know. But health insurance really is the big one. And then the IRS decided it was tax-free to the employee. They didn't have to do that. They could have said, yeah, I mean, you can provide them health insurance, but that's part of their compensation. That's part of their pay. They're going to have to pay tax on that. But the IRS decided for some reason to make that tax-free. I'm not saying the US is the only country that's like that, but I cannot think of another country that's like that. I go to Costa Rica a lot. Costa Rica looks a lot like the UK, where it's a single payer government provided plan. So yeah, it's US is very unique. And so now you have something where your employer can pay you something where they get the deduction, you don't have to pay tax on it. It's like, wow, this is pretty good. We should do that with everything. We should buy your groceries. We could buy your groceries, get a tax deduction. You don't have to pay taxes for it. We can provide all your child care. We can pay your rent, right? You could really go wild on this, couldn't you? You essentially take every expense an employee has and just provide that through the corporation, and the corporation gets tax deduction. Your salary goes from $80,000 to $10,000, but you don't care because they're paying $70,000 worth of your bills and it's all tax free. So why didn't they go wild with other things? I don't know. Why aren't they paying your auto insurance? You're paying all this other stuff. So I don't know. They stopped at health insurance. So what does that do? There are a few things here. It increases insurance, which what increases usage of the health care system. It increases people because, you know, insurance pays, not the patient. So the patient overuses the system. So that's a lot of people, you know, that's what that second article was saying. If insurance is paying that 600 and something $1,000 bill and the patient's only paying $1,000, they don't really care if you have another test because they're capped at $992. That's their deductible. They don't care if there's more pills. None of that. She doesn't care. She's not even asking about the bill. She knows she'll have to pay something in. $1,000 is $1,000, but you kind of expect to have to pay something. So at some point, she doesn't really care. Do whatever you're going to do to save my husband, you know, whatever it costs, do it because I'm not paying for it. I'm not saying if she knew she's going to be paying $600,000, she would have said, "Hey, pull the cord. He's not worth it." I doubt she would say that. It'd be much, much more agonizing for her if to save her husband, she'd have to put them both in the poorhouse, and they had to live on the streets. And you talk about, okay, if I save my husband? We have to sell our house. We're going to be living in a box on the street. So it makes it much, much more difficult for her. But in the current system, she's not thinking about that at all. She doesn't care. And what does this mean? The highest tax brackets get the highest benefit. So there are many examples. There are tax code provides the biggest subsidies to the wealthiest people. Can y'all think another part of our tax code that skews to the wealthy? What about the home interest deduction? Who gets the benefit of the home interest deduction? Probably 96% of it goes to people in the top 5%. Income bracket. Why? Do y'all know what the standard deduction is? Y'all do your taxes, don't you? $15,000, 30,000 for married. How many married people do you know that have $30,000 in interest on their mortgage in a year? That's a pretty big house, isn't it? So you have to be over that 30,000 to get the home interest deduction. So any of y'all have that? What would that be? What are interest rates? Mortgage rates were it's about 6%. So you're talking about well, people probably do have $500,000 houses, but that's where you start the deduction. So you got to get $30,000 in interest, and then you get a tax deduction over the top of that, unless you have charitable deductions or other things. So it skews very, very heavily to the wealthy. So it's simply an artifact of our history. IRS has debated this at times, but it's in place. It's pretty solidly there. Employers started doing this, and employers, it just came to be expected from most employers. Would you take a job that doesn't provide health care, health insurance? You say, yeah, I don't want any health insurance. I'll buy it myself. I don't know. There are debates, and we've had this debate with the Affordable Care Act when it came out. In fact, if you read one of the founders, one of the consultants, his idea was over time, employers would start shutting down their health insurance and they would push their employees to healthcare.gov. That hasn't really happened. I think the reason it hasn't happened is you really need one big employer to make a big deal about it and say, hey, we're getting out of the health insurance business. We're going to give our employees all $20,000 raises overnight. They're going to have to go out and buy their own health insurance. Once IBM does that, or Amazon, I doubt Amazon's going to do that where they are right now, but somebody, USAA, some big employer says, no more health insurance. We're giving it to your employees. So you can go work for, let's say, HEB, and they'll pay you 80,000, or you can go work for HEB, USAA, they'll pay you 100,000 bucks. Same job. One gives you health insurance, one doesn't. Which how would you decide? 80,000 HEB plus health insurance, or 100,000 USA without health insurance? Would you do some math first? Would it help decide, or how many of you already decided? Nathan, where would you go? Well, no, you do it yourself. Well, you're an actuary, so you can figure out the math. You could probably set up an AI program to bring all the data in. It's a pretty tough math equation, right? But maybe set up an HSA. So I would probably look at that. What I did, it was pretty hilarious because USA had a huge deductible. And at first I went to that because I did that in my 20s and I just saved the savings in the premium. And it took me like 3 or 4 years to save up the entire deductible. So after 3 years, I was way ahead. And then I started teaching at UTSA. Well, UTSA provides health insurance whether I like it or not. It doesn't change my pay at all. So I canceled my USAA entirely and just went UTSA. And it was the best deal. USA paid me like $1,000 to cancel my health insurance. I'm like, okay, fine, I got it. So that did influence my decision which entity I'd get it from. But you're not seeing that a whole lot. You're not seeing employers. Maybe y'all need to start telling your employers, why can't you give me that as my pay and give me that choice and let me to make that decision. So it's just come to be expected from most employers.
Would it be a major decline in the overall health of Americans?
Well, that's
using that extra income for
that's the question. We're going to talk about that on the incentive. we'll get into that. We're definitely going to talk because, as Milton Friedman says, it's the ultimate consumer good. Nothing's more important than your health, right? If I'm in pain, don't offer me tickets to Disney World. I don't care. I don't want to go. It's not interest. I don't really want to go anyway. But yeah, I mean, it's like if I'm in pain, nothing else matters to me. So the incentive's already there, right? We only get one body. We should have pretty high incentives. So how much are these other things going to influence us? I mean, it's kind of like with life insurance, right? Oh, I don't have life insurance, so I better be careful. Oh, now I have life insurance. I'm gonna go bungee jumping and skydiving every day of the rest of my life. Maybe not because I mean, death is kind of an ultimate thing. So I don't know. Well, we'll talk about that. We're gonna get into it. Um, Here though, the question is, why is your employer providing it? Your employer is providing it because IRS really sets it up. So from Nathan's point, if he takes the job at USA for an extra 20,000, that's going to be taxable. He goes to HEB and they provide the health care, that's going to be tax free. If he buys a $18,000 healthcare policy, he probably would have been better at HEB because he's going to buy the 18,000 health insurance with after-tax dollars. If he buys a $5,000 high deductible policy and he's really healthy, he doesn't get sick, he's probably a lot better off at USA without. I'm not saying USA is doing that, but if someone did that, that would be it. So the tax policy is extremely important. It just became standard from large employers to provide this, even small. I've worked at some pretty small entities that provide healthcare. Entities that have 10, 15 employees provide health insurance to their employees. It's a big part of the compensation. They would love to get rid of it because it's pretty expensive. But it's become pretty standard. Most people ask that question. If you go to the employee orientation, that's going to be probably 3 or 4 hours of the presentation to get you onto that. I'm 62, so guess what kind of emails I'm getting right now? Medicare, 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 right? Everybody wants to help. USA is sending me Medicare. It just makes me so mad. It's like, now that you're really old, we can start sending you Medicare stuff. It's like, I'm not interested yet. All right, so the tax policy, really important. It's, I think, fairly unique to the United States. With insured consumer voters generally believing that someone other than themselves is paying for the health care, they see no reason not to approve regulatory and other public policies that raise the cost of care. So that's the other part, is the consumer wants everything covered. And when they want everything covered, what happens? I mean, it's kind of interesting. Employees demand coverage, which raises health insurance premiums to employers, which reduces all other compensation, which makes employees mad, employees and legislators mad. Why are they getting less pay? Because they're demanding more pay as healthcare. Say, hey, I want everything covered. I don't want high deductibles. I don't want to pay, I want to go get major surgery and I only have to pay $100. I want this weight loss drug. Yeah, it costs $14,000 a year, but I only want to pay $100 a year. Fine. The employer says, fine, okay, we'll do that. That's costing us an extra 14,000, so we're going to cut your pay 14,000. So this is pretty interesting. If you go back and you look, so you can go into Fred. Y'all use Fred. I'm a big believer of Fred. Let's do Fred, do personal income. Y'all know what Fred is? Who Fred is? Anybody know? Fred? Federal Reserve, St. Louis, rate site. You just type Fred and any economic number you need. And you click on it and voila, you have it. There's personal income. What is this right here? What happened there? Anybody know? Any chart you see where there's a major spike up or down, it's always what? It happened in your lifetime, not that long ago. Huh?
Like stimulus checks?
Yeah, COVID, right? COVID, the stimulus checks, unemployment, jobless claims, everything. It's funny. I was watching the Bloomberg Market Concepts, and they have all these Bloomberg charts, and they're also interesting. And I'm on Bloomberg doing the same charts. They did all of their charts before COVID. I'm looking at the exact same chart after COVID, and you can't even see the chart anymore because COVID's this massive spike. So yeah, that's COVID. But is personal income going up? Well, the one thing you have to ask with this chart is, does personal income include health insurance premiums paid by employers? And if it does, and I think this one actually does, what people are discovering is it looks like incomes are going up, but take-home pay is going down because a lot of that income is higher health insurance premiums. And so the employer is saying, hey, we're paying you a whole lot more money. And the employee is saying, but I don't know if I can't pay my bills. I'm getting less take-home pay. And so it's important when you're looking at income, you really got to look, is it including that health insurance premium? And if the premium's getting larger and larger and larger, that means that's squeezing everything else we have to spend money on. So personal income, a great chart to do is personal income and compare it to consumer credit. Which do you think is growing faster? Consumer credit is pretty scary, except for when? COVID. Why? Because we got all that money, we could pay off our bills. But you look over the long term, there's something going wrong with the American consumer because credit is growing. Now, some of that's artificial because we're using credit cards instead of writing checks. So it's hard to say how much of that is we're just much more indebted, but we're definitely more indebted. It's just hard to get the numbers. Where you see how personal income falls during recessions. It's hard to, I wish they would do this log normal. What if you wanted this data in Excel? How would you do that? Right there. Isn't that amazing? You got the whole thing right there. It's kind of nice. Sometimes I do copy this because I do like having the recession charts in there. That's kind of cool. But yeah, really, really, really amazing stuff. But any economic data except for October data, right? You can't get that because of the shutdown, but eventually I have that data. And they also have, you can go to the category and look for other related ones. So it's a great, great, great website. All right, so yeah, so this is the frustration for employers. Employees are saying, give us more, give us more, give us more. And the employer said, okay, well, if that's the only way we can keep you, we'll give you more up to an extent that we don't lose you as an employee, but that's going to raise premiums. We're going to pay more in premiums. We're going to cut your salary. So USAA started this thing while I was there, where they actually sent us a report on our total compensation. Everything. Why? Because they wanted us to see what they were paying for our health insurance, what they were paying for our pension plan, what they're paying for our 401k plan. They want to say, yeah, you think you're making 60,000. We're actually paying like $130,000 for you. You're a lot more expensive than you think. And healthcare is a big, big, big chunk of that. So now could you Google that and find something? How much does the health insurance employer deduction costs the IRS? You could probably find that. It's probably out there. I probably didn't word it very well. There's probably a typo in there somewhere. But I'm pretty sure you can find a more update article than this one. They say it's the biggest secret in healthcare. I'm in the camp that believes we should do away with I'm okay with the employer deduction. I want to do away with the employee tax free. But I'm not running for Congress or president, so it's really easy for me to say that. But yeah, I would make it taxable. And I agree with Kamala Harris that we should untie it to the employer. I don't think the government should force that, but I think employers should more and more just saying, hey, you know what? We don't want to deal with this anymore. It's your health care, it's your health insurance. Go buy what you want and leave us out of this. I wish they would do that. It would save them a huge, huge, huge hassle. Employers hate health insurance. It's a major distraction for them. Or any questions on so you're going to have to talk about this. Make sure you talk about it completely. I'm looking for that full discussion. There is It probably started out pretty well at the beginning, but over time, the healthcare system discovered that, wow, and the employees love this. Someone else is paying for it. The employers love having a tax deduction. We'll just start offering more and more and more and more services, and it just starts ballooning way out of proportion. All right, now we're to the crazy stuff. This is the toughest part of the class to get through this, but and it's this large collection of healthcare articles. So load that. I'll let everybody load it. We're not going to go through every page, but it is a large lot of pages, but we will go through quite a few of them. So this is where you're going to have to slow me down. I did try to categorize it, but the categories don't really work because several articles talk about several things. So it's hard to say this article only talks about this. But it's only 205 pages long. Now, I found 3 articles in The Economist last week that I was going to add to it. I was like, I probably should stop. But I might show you those articles. Obviously, President Trump and President Biden have both made huge issues about pharmaceutical costs. And you see what President Trump is doing, this most favored nation thing. There's a lot of debate whether or not that would work or not. The Economist had an article on that. Will what Trump doing, will it actually bring pharmaceutical costs down or will it not? Why are costs so high in the United States? So I don't know why I didn't capitalize that. So I'll try not to add any more articles, but it's so tempting if I see a really good article because there's so many of them. So the economists can go 3-4 months without an article on healthcare, but because what's going on in Congress right now, because what President Trump said about pharmaceuticals, suddenly we're getting 2 or 3 articles a week on healthcare. So I can't resist reading them. They're really good. If you're trying to find something for that extra 10%, then email me and I'll send you some of those articles on pharmaceuticals, and you can use one of those as your extra article because they're really The Economist. I probably 70-80% of the articles here come from The Economist. I don't know if y'all, do any of y'all have a subscription to The Economist? Because I think they have a student version. It's expensive for me. It's like 75 bucks a quarter or 55, 60 bucks a quarter. I can't remember what it was. So it's kind of expensive, we get everything free digitally. But The Economist and Wall Street Journal and New York Times are three of the ones that have done pretty well on the digital side. I like it. I think especially if you're a finance major, actuaries maybe is not as valuable to actuaries, but I think it would be valuable to both. But The Economist goes through the entire world every week. It talks about all elections, and then it has a business discussion where they do really good articles on businesses and industries, and they have a finance section, which is really good. They have a science and tech section, which is really good. They have a cultural section, which is really good. One of my favorite books, Albert Woodfox wrote a book. He was the guy who spent the longest time in solitary confinement. It's a really long book, and I got through like the first third of it, and he's in solitary confinement, and I'm looking at the rest of it going, wow, this book's gonna get really boring, but it didn't. It was actually a pretty interesting book. Got that from The Economist, really, really, really good. So I think it's worth 60 bucks a quarter, but see if they have a student version or something, because I think it's really keeps you informed. In finance, you're looking for ideas, especially if you're on the investment side. I think it gives you some really good ideas. This last 2 weeks, excellent articles on AI and data centers, on what's going on in the travel industry. Why are the wealthy spending a lot of money, but the not so wealthy are cutting back dramatically in hotels and airfare? Just really, really good articles. So I highly recommend it. But anyway, so most of these are from The Economist. So we're going to walk through them. So everybody have this loaded. All right, so let's just start with the first one. They are highlighted. There are articles in here where you can definitely copy and paste the graphs and charts. Some of these charts are really good. So on what I highly recommend that you do is in this particular one. So on the other articles we did, it was one article. You can just say you got it from that article. You don't have to say which page or anything. On this one, I would know which page you're copying from, okay? So you can tell which article you're coming from. So if you have a typo or something messes up, you can go back and find it. So note the page numbers. I think I put the page numbers in. So they're there at the bottom of the page, so that helps. So here's one from July of this year. So how is the health insurance industry doing? Health insurance, not healthcare. So you have to be real, it's really bizarre. It's gotten really difficult. So the GIC, y'all heard of GI, the industry codes. Healthcare is a sector. So you have technology, financials, healthcare. Health insurance is generally located under financials, not under healthcare. But it's getting really confusing now because the insurance companies are buying healthcare providers, the healthcare providers are buying insurance companies. So it's really hard to know where they go. Insurance companies like life insurance, property and casualty, they definitely go under financials. It's the health insurance side that's getting a little bit tricky where they should go. So here we're talking about health insurers, not healthcare providers. Healthcare companies, revenue, premiums, most of their other revenue is probably going to be investment income, but I don't know if this is just healthcare premiums. Since November, United Health. Y'all have heard a lot about United Health, haven't you? That they're the ones that had their CEO was killed. But also the stock just itself has just not done well. So you see that massive, massive drop. What was the date of the, I mean, and this is a more terrible thing to talk about. What was the date of that? Y'all remember? Man, a young guy too, right? 5 days ago. It wasn't that recent, but he looks way too young to have been a CEO, but I don't know what date it was. February 21st. That sounds about right, doesn't it? Last year? Okay. Published October or October maybe. So this United fall is not really specifically related to that news. Obviously, when that happened, when you see people out there saying this guy doesn't deserve to go to trial, he should be released. When you see the intense backlash against the health insurance industry, as more horrible as this story was, you actually have people out there cheering the guy who killed this. You know, that shows you how much this industry, that just its public relations issues. But that happened. Let's see if we can go 1 year. So if it happened back during this time, you have to go a little bit further. You have to go. Did someone find the actual date?
December 4th.
December 4th. So there was probably obviously some reaction. So, and here, and then that is not, this is something completely different. This is probably Congress investigating them for Medicare fraud and some other things. So this industry is really, really strong. I mean, that's a pretty big drop from $600 down below $300. And we're talking just in a matter of a few months. So this industry definitely has some problems. So since November, United Healthcare has collapsed from when it got up to $600. Well, this is in billions, so its market cap is $500 billion to $240 billion. A very large company, right? We're so used to NVIDIA being 4 trillion and these other, but 500 billion is a large, large, large company. You can see United Health coming down. You can see, I guess that's Humana coming down. CVS has recovered, but it did drop quite a bit. The downturn reflects underlying symptoms. Medical costs are rising, regulatory scrutiny is growing, and public funding is tightening. Medicare, a federal scheme for those age 65 and older, covers more than 65 million people. Most now choose Medicare Advantage, a private alternative under which insurers are paid to provide equivalent care, but with added benefits. Those premiums are going up. I'm going to have to go through this whole equation myself and figure out how I'm going to be covered. Medicaid, that's for lower income, run by the states, serves low income Americans and covers 71 million. So there you have right there 68 million, 71 million. There's some overlap between those two, but you're talking about 120 million people. You're talking about a third of the US population is covered by a federal program. So when people say we want a single payer program, we essentially have in the United States, because what am I leaving out? The VA. The VA is probably, I don't know, another few million. So you've got over a third of the American population. And VA, you got VA plus their families. So you've got a pretty large percentage of the United States. And Medicare is the biggest piece of this because that's where most of the costs are. So while Medicare may only be a fifth of the US population, their costs are 2, 3, 4 times more than the cost of other people. So it's a big part of the actual payout. Public health insurance programs cover almost 170 million people, roughly half. They say half the population here. I don't know where they got the rest of the group. Medicare Advantage has become a growth engine for private insurers. United Health revenues for Medicare and Medicaid have risen from 70 million to 222 billion, 70 billion in 10 years to $220 billion. MedPAC, a congressional advisory body estimates that Medicare Advantage costs taxpayers 20% more than Medicare. So again, you're paying for this like everything else. Everything comes back to your generation. PricewaterhouseCoopers expects 8.5% rise in 25 and 26, fueled by pricey cancer treatments, growing demand for mental health care, and booming sales of weight loss drugs. Patients on public plans tend to be especially costly. So while it's half, it's more than half of the cost. S&P Global forecasts that the medical loss ratio, the share of premiums spent on care, will hit 88%. What does the law require? The Affordable Care Act requires 80%. So this is on claims. Be real careful on this. Those who took my property and casualty class, we talked about combined ratios of like 95%. A combined ratio is claims and expenses. Here we're talking just the claim side. So they only have 12% left to cover their expenses and cover their profit. So it's not a heavily profitable business. They say most aim for 80%, but that's what the law requires. They have to, if they take in $100 in premium, they got to pay out at least $80 in benefits. The one big beautiful bill passed early this year includes deep cuts. The federal healthcare spending. You get a little bit of a sense that maybe the fight the Republicans actually want in Congress, that they do want to make those cuts. It'd be interesting to see if that politically works for them. Medicare funding will fall by $910 billion over the next decade, 14%. What are Republicans saying? Well, we're cutting coverage for people who shouldn't be on the system anyway. So we're cutting out people that aren't citizens or whatever. So they're saying they're trying to argue it from that standpoint. I'm not going to say who's right or wrong. I would just wish we could get the truth, get the facts, and everybody sit down and agree on what the facts are, rather than everybody yelling at each other. Will be 16 million more uninsured Americans by 2034 than otherwise be the case. So what is the cost of all of this? And more uninsured. So uninsured is part of this rubric. You can just search on uninsured. It's the easiest thing one of the easiest thing on the entire. So all I'm looking for here is what it is. You can use the articles or find a more current number. So here you could add more. That could be an acceptable. That could be an acceptable for the extra 5%. So that argument that, hey, if Congress doesn't address these subsidies, the cost can go up so much that you're going to see a large rise in the uninsured. You can definitely find articles. And the ACA impact. This is why I said ACA focused on the demand side. And so you would hope it would have been successful there. So you can certainly, it's such an easy thing to Google. How many uninsured Americans are there for health insurance? And you'll have something come right up. Probably Copilot will come right up. That seems excessive. So find one that's more. It's dropped since you'll find CDC is probably pretty reliable. 11% of Americans were uninsured in 2024. That's Health Exec. So you'll be able to find it out there. You can probably find a graph. A graph would be pretty cool. There is definitely a significant drop pre-Affordable Care Act and post-Affordable Care Act. Most of that is people being eligible for Medicaid and Medicare, being able to jump into that system or Medicaid. So a lot of that is from that standpoint. You could, for your extra 5%, if you wanted to, you could discuss why are the ones still uninsured. So I'll just say some 5% opportunities. So at least address, I mean, you can get full credit if you just find one of the articles that says X% of Americans are uninsured. Try to find something that's post-Affordable Care Act, but by word, Google it. You can see how easy it is to Google it. Granted, you might get 4 sites with 4 different answers, but if they look legitimate, put that in there. So it's a really, really easy one. The one I find the most interesting is this one down here. Because the articles I've seen, there's a large percentage of the uninsured who could afford health insurance. They've just made the financial decision to go without insurance. They've decided to roll the dice. And essentially what they think, and I don't think it's a bad decision at all. I'm not telling you to do this, but I'm 22, I'm healthy, I exercise, I don't jump off bridges with bungee cords. I don't do dangerous things. I don't have any medical history with my family. It's highly unlikely, and it really is highly unlikely I'm gonna have a major medical bill in the next 10 years. I'll just not get health insurance. I'll put it into savings. If I do have something happen, if I'm lucky, it'll happen in November, and then I can go on healthcare.gov and get insurance, and it will cover me because there's no pre-existing conditions on healthcare.gov. All you got to do is you sign up. So if you are going to go bungee jumping, when do you go? Go in November, right? Wait until November. Then if you get injured, you can go by. So same thing with your employer. Your employer has an open enrollment period. Now they may have pre-existing conditions, so be really careful on that. The law has changed so that it makes it really difficult to screen out pre-existing. So usually if you sign up during the sign up period, you're covered. But I don't know if you broke your leg, I doubt you're gonna be able to wait 6 weeks. So, I'll just let it go until, I get my insurance. So you may be in trouble on that. They're probably not gonna pay you back from 3 months ago. So, but there are articles. This is mainly young people, not necessarily poor young people. They might be wealthy, but they're people who could afford to buy insurance if they wanted to, and have simply chosen not to. Is that 30%, 40%? You can find the articles that talk about it. It's probably changed over time because a lot of people that aren't in that category have signed up through the Medicaid program. So I'm not asking for much there. You see right here, this article gives you some data on that. So that it could drop, could jump pretty high, or you could see an increase. So you could put that into your paper. You would like to. United Health, for its part, revealed last week that it faces both civil and criminal probes into its billing practices. That's one reason its stock is falling so much. Inflated diagnosis to make patients appear sicker and trigger higher government payments. So they're in trouble, no question. So I spoke to a student, alum of UTSA, who's working for United Healthcare. He's not on this side of the business, so he sounded like he was on the good side of the business. But I'm scared to call him again today after all this hit the news. I talked to him before all this hit the news, so no telling if he's even still there. Most insurers are seeking premium increases of 10 to 20% for 2026. And now you're seeing that before Congress, just large increases. Um, all right, all right, so what you need to do, and if you go to the very top of the word, you need some introductory discussion, and you've got a lot to select from, including a current Google search. Really what I'm looking here is US healthcare as percent of economy versus other countries, are the cost per patient versus other countries. Something along those lines. There's a lot of data there. You can definitely Google and get data on that. I'll give you some charts. The charts I have, I like them because they're really good charts, but they're also really dated. So it's a little frustrating. So we know the US spends more than, I think, every other country. Maybe there's one or two out there and just some small country. And it's quite a bit more, you know, like twice as much as maybe UK or Canada. But we're also wealthier than these other countries. Because we're wealthier, healthcare is something you're going to spend money on because it's the most important thing that you buy. So, you know, there's debates both ways. We may be more expensive because there's something wrong with the system. Maybe more expensive just because we're wealthy. We want to be healthy, and so we spend money on it. So it could go either way. America devotes 17%. So this is 10 years old. 17% of GDP to healthcare versus 9% for Britain. Yet nearly 50 million Americans were uninsured in 2012. That's no longer true. 50 million Americans. It's a smaller number now, but and we don't live as long. So that doesn't sound good. We spend twice as much. We have a lot of people who aren't even insured, and then our results aren't as good. That sounds pretty bad, but maybe our results aren't as good because we smoke more, or maybe because we drink more, or maybe we don't exercise as much, or maybe we have drug abuse more in other countries. We're going to talk about those issues. Is it the healthcare system that's the problem, or is there something else wrong with Americans? Employer-sponsored coverage is tax exempt. So here's a number. It's an old number. If you want to put that on the tax side, you can. So find the tax side, $200 billion a year, but you can probably get a more up-to-date number. Fuel healthcare inflation in favor of rich employees who would pay a higher tax if they were compensated with wages alone. Roughly half the population finds their health insurance is tied to a job. This makes it harder to switch employers. I'm going to take that in. One of the problems, I do think it's a problem, and we've talked about it already, is that health insurance isn't tied to your employment. I don't know what page I took that from. I don't think I caught that. I'm on page 5. Now that's half the population when it was written. Obviously, as the baby boomers retire and age, you can have a larger percentage can be Medicare. And as we just discussed, healthcare inflation is one of the main reasons why average American wages have stagnated. Employers will say, we'll pay more for healthcare, but we're not going to pay you more. We'll pay you less in salary so we can give you more health insurance. All right, so this next paragraph has a few things in it. Actually, this has like 3 or 4 bullets into it. So let's look at it. First of all, is this concept of waste. We'll get into that quite a bit. For Medicare, you're going to see numbers ranging from 30% to 50%. That 30% to 50% of Medicare is waste. Now, what do they mean by waste? What they mean is if we could cut Medicare 30 to 50% and the health outcomes of the senior citizens would be no worse off. And in fact, some people argue they'd be better off. That some of this waste we're spending is actually killing people. So we could cut Medicare 30 to 50% and the senior citizens in the country would be equal or in better health. That's pretty massive health for something that, waste for something that's costing us $1 trillion. The next thing we have is focus on treatment over health. That's the second issue. So focus on treatment over health outcomes. What do you want your doctor thinking about? What they can do to you or how they can make you healthier? Which would you want their incentive to be? What is their incentive? Their incentive is to cut you open. What do you want their incentive to be? To make you healthier, right? Another thing is the billing side is impossible to navigate. Patients don't know what anything costs. You can't be a consumer. If you don't know the price of something, if you go to the car dealership and buy a car and you get home and someone else is paying for it, you never know the price. What kind of car are you going to get? Probably a pretty nice car, right? You say, oh, no, that car probably costs too much. Give me this little sedan over here. No, give me the best. Why not? Who's the best doctor, best hospital? So if you don't know anything costs, then yeah, just give me the best. And then the other thing is the costs vary widely depending on where you go. Here they give an example. In New York, a mammogram can be $100 or it can be $1,700. But what do you care? You're not paying for it. What do you think the choice there is going to be? Maybe location? We're going to talk a little bit later. There is a firm out there that will say, we'll pay you $50 if you'll drive an extra 5 minutes. So if you'll drive an extra 5 minutes and go here, patient. So this is kind of just a little bit to your comment. Not quite on the healthy side, but it's an incentive for action. What would you do? Your insurer says, drive an extra 5 minutes, get the mammogram, we'll pay you $50. Or you can go here and we won't give you $50. Would that be enough to induce someone to drive an extra 5 minutes? So yeah, we'll see. That's one thing you could definitely do on your paper for the 5%. I'll show you that firm. You can look it up and you can see if it's actually viable in San Antonio. If you could actually use it in San Antonio, it'd be pretty nice, right? Someone's going to pay you money and all you got to do is drive a little further. Might be interesting. So there's 4 things in there. Waste is there. Treatment over, and I'll show them to you in the rubric here. So fraud and waste, that's half of it. We haven't talked about fraud yet. Fraud and waste. This article doesn't really help you much with that. It just mentions it. Focus on treatment versus prevention or health. Lack of price transparency and inconsistent cost. City to city. So in that one paragraph, you see why it's hard for me to categorize these articles based on the rubric because they jump all over the place. Now, what's the problem in the UK? Very, very different problems in the UK. We'll talk about it. UK does have some of our problems, but they're very different than these 4. They have additional ones, but they have a lot of overlap. We'll talk about the overlap within the UK. UK doesn't have this problem here because it's a single payer system and it's a single provider. So the insurance and the provider are all the same. So they don't have that issue. And they don't have a waste issue either because they simply don't pay for stuff that they don't think works. So they do have this overuse issue, but the system's pretty strict. I mean, the patients don't know what anything costs because they don't care because the government's providing everything. All right, so here's their solution. Does this sound familiar? This is coming from The Economist, right? Yeah, this is coming from The Economist. So look at this solution. This should sound Congress should move towards scrapping the tax break. We've talked about that, haven't we? For employer-provided health insurance and a requirement and stop having employers provide it. Those savings should be used to help cover subsidies for the poor. Without tax distortions, employers would pay higher wages and workers would be consumers. Again, in one paragraph, we had 4 of the problems. And in one paragraph, you practically have, 50% of the solutions there. Get rid of the tax break. We'll talk more about that. I'm going to talk about tax credits and why I love tax credits. So we'll talk about tax credits. What's the difference between tax deduction and tax credit? So just to throw it out now, right now your employer gets a tax deduction. You don't have really any control over that. What if instead the tax code said your employer is not providing you health care, you got to provide it, but you get a $3,000 tax credit for health insurance. If you don't buy health insurance, you lose that $3,000 tax credit. What are you going to do with health insurance? You're going to buy at least how much? $3,000, right? And that's even for people who don't have that much income because it's a negative tax. So if they only have $2,000 in income, they still get a $3,000 tax credit back. I'm going to talk about tax credits. Tax credits have a much bigger impact on behavior than tax deductions. The tax deductions at the employer side. So we'll talk about that. So when they say scrap the tax break, I'm going to say yes, but I'm open to a tax credit. Scrap the employer providing it, give that money back to the employees and let them act like shoppers. If you do the tax credit, they're still going to be shoppers because you give them a $3,000 tax credit, they still have $3,000 of their money they got to spend. It's just that the government's going to reimburse. So they might spend $4,000, but it might cost them $4,500. So they're going to shop $4,000. They just know the government's going to give them back 3 of that. So they'll still be a consumer, but the government's going to help offset some of that. Well, we'll talk about that. So you see why I like The Economist. Everything's all in one place. Employers are already making employees pay more, so that's already starting to happen. So the higher the deduction, the deductible, the more you're moving to this kind of model. And as patients become more consumers, healthcare providers are improving their game. The government should release more data. We'll talk about this as well. We'll start here.